Hi dear traders, markets stay positive until the end of the trading week. In the upcoming policy meetings this Wednesday, the US Federal Reserve is expected to raise the key rate by 75 basis points. However, one of the leading indicators reflecting the state of inflation, the Personal Consumption Expenditures Index, showed that inflationary pressure had slightly eased. This means that the Fed may slow down the pace of monetary tightening starting from December. So markets closed last week keeping this scenario in mind. The US dollar index, which demonstrates its value against the basket of 6 major currencies, stayed near the level of 110.60. The decline could have been even worse if not for the news that the US economy recovered from the technical recession in the third quarter. In the meantime, the single European currency was hovering near the parity level when trading against the US dollar. As expected, the European Central Bank raised the rate by 75 basis points to 1.5%, its highest level since 2009. However, investors doubt that the European regulator will maintain the pace of aggressive monetary tightening amid growing risks of a recession, the energy crisis, and rising inflation, which is expected to pick up. At the ECB meeting on Thursday, Christine Lagarde said that the central bank had already made significant progress and the future policy rate path would depend on the evolving outlook for inflation and the economy. Yet gloomy forecasts may put the rate increase on hold. As for the British pound, it gained some optimism last week. Rishi Sunak took over as the next UK's Prime Minister after Liz Truss resigned. In his first statement, Rishi Sunak stressed that the main priority of the government was to stabilize the economy. The market was encouraged by his words and began to buy the pound. Besides, traders are waiting for the meeting of the Bank of England this Thursday, where the regulator is expected to hike the rate by 75 basis points to 3%. Before, the rate was raised by just 25 and 50 basis points. Such an acceleration in monetary tightening may support the pound. Other global central banks also loosened their policies. For example, last week the Bank of Canada slowed down the pace of monetary tightening and lifted the rate by 50 basis points despite the fact that inflation in Canada is still running high. The Reserve Bank of Australia also surprised the market with such move. This Tuesday, the governing board of the Australian Central Bank will meet to discuss the prospects of the economy. Forecasts are mixed. The majority expects the regulator to raise the rate by another 25 basis points, while some analysts suppose that the rate can be lifted by 50 basis points to 3.10%. The Australian dollar is currently trading at the level of 0.64 against the greenback. In case the Australian Central Bank hesitates to make any changes, the Aussie is set to decline further. Meanwhile, the Japanese yen continues to tumble. Thanks to the intervention carried out by Japan's Minister of Finance, the pair managed to recover back to the level of 147 yen per US dollar. The Bank of Japan maintains its ultra-loose monetary policy in an attempt to prevent the economy from a recession. Apart from interventions, the yen was able to recoup some losses thanks to the easing of the US dollar across the board. Gold was the only asset that failed to take advantage of the weakening US dollar. The precious metal depreciated by almost 1% to the key level of $1,640 per troy ounce. Investors still prefer to stay with government bonds and avoid buying gold. To finish our currency and commodity review, let's take a look at the oil market. Fears of the global recession and weak energy demand still persist, especially given the coronavirus restrictions in China, the largest oil consumer in the world. Yet Brent crude managed to advance last week and gained almost 3% on concerns about the deficit in oil reserves. These are the trends of the last trading week. Also, do not miss our traditional weekly review, which is due tomorrow. See you on InstaForex TV channel.